as always. So wanted to bring you some data as well into the analysis. So just wanted to have a check here around ETF cost bases because it is something that Caprio has just added and I wanted to share it with you. So the average cost basis for ETF investors is around that 75,800, which aligns nicely with our weekly 10 EMA. So don't mind that at all. Where things can get a little hairy is essentially on the technicals and certain data sets like this, where I think when you close beneath that 10 EMA on the weekly and that 74,000 region, I think, which is my, where is it here? This horizontal through here, these two touches, and then you're starting to flirt with some of these lower levels, then things become a little bit more problematic. But right now, what we are doing is we are breaking out and we're trying to come back and retest that breakout. And we just don't want to lose that level. So wanted to share that with you. 75,000 is the ETF cost basis. So it can be looked at in a few ways that, okay, one, that's good. We're trying to, investors, I guess, are feeling a little bit better that they are now back into either a neutral state or a profitable state. The opposite can also be true when we duck beneath that level. It can create a little bit of panic and then you see a little bit more of a sell-off. I think we are just going through the motions here of accumulation, slow chop, trying to build our way out. Really need to see if we can hold this 75 to 70,000 level. If we can't, yep, we're going back to 60,000 lower lows. But as always, we just want to have that upper and lower strategy for either, and nothing will surprise you and this sort of stuff. Yeah, it's all good. If you're in altcoins, slightly different, especially if you're in a couple of trades. I know I am, and I'll cover them off maybe, especially in the short term. I'm not bearish at all in the medium term and longer term, but it's just short term. What are we doing here? Do we need a bit more volatility to the downside before we go higher, or is this just a nice little pullback? Okay, let's get into this. I just really quick want to touch on potentially why there's been a bit more pressure across the board. And look, bond markets, you may have heard me talk about it over the years. I sometimes pop up with this every now and then. Again, macro schmacro to me. I think a lot of macro can be sort of hindsight crystal balling. Once things have happened, then you look at them, then you mention them, and by that time it doesn't really matter anymore and it's gone. I don't think this is in the same bracket because this is the long end of the yield curve. So I think 30-year treasuries, 20-year treasuries, and this is in the US, then you look in Australia, our long bond yield curves are just screaming higher. What does that mean? Well, people are selling debt or don't want to own government debt. And that's a big problem because who's going to buy it? And if no one buys it, if people are selling bonds and not wanting to own it, the yields continue to go higher to make them more attractive to own. However, we all understand all the governments are broken. They're spending a lot of money. They're going to raise more debt. So why would you want to pay here? You look at this as the US 30 year. Why would you want to hold a bond for 30 years and get paid only 5%? So this is a lot of what the banks give you. They're going off a lot of these interest rates when you put your cash into a bank account. Can you imagine holding cash for 30 years, getting paid 5% when inflation is probably well into 12%, especially in Australia? Why would you hold that? So I have to think in these terms that these bonds, no one wants to hold these to maturity. These are so long-term dated. Another one was SUI, which luckily had a lot of my bids fill. But SUI is very volatile. It can go down further than you think. And I had, where's my orders? Yeah, here. So I hated this candle because Sui does that all the time. And then it really screws with people. And look at that, all the way back to 23%. So I had an order filled, I think, at 1400, and that was originally on this 20. And then I had another one queued up on the 10. At least I thought in that area. I think I got 1450 and 1400. Yeah, not too far away from my buys. I'm only like 4% down on my buys, so that's okay. But this is a weekly play, so I'm thinking, okay, this actually did close above this level. This is trying to do a trend change, but then it sort of closed back underneath, and I want to see follow through after that. But I think I'm going to run some stops a bit later in the week. I'm going to assess my positions today, but right now this is about sort of accumulation for a larger move. But to be honest, Bitcoin's relative weakness here in the short term doesn't give me a lot of confidence around some of these altcoins, but that's okay. We play the ball where it lies. It looked good last week. And where things can really wreck you is when you change your plan just based on shorter term stuff. You get a little bit jittery and move from there. Did notice Zcash was having a little bit of a moment, a little bit of a pullback. There was another one as well. Yeah, Hyperliquid. So this has been a perennial tease, and this is why, guys, you wait for the weekly close. So down here, it looked terrible down at 39.38. It looked like the weekly was going to close before the weekend in a terrible. Hi guys, thanks for watching this short clip of my Monday market update. The full version covers 20, 30 minutes, however long it goes. I look at the entire market, what I'm seeing, opportunities for investors, and that drops every single Monday to your email and also into the Discord. If that is something you want, as well as Altcoin Bible, Talking Crypto, Thinking Rich, bi-weeklies, workshops, which we run every single month for all our mastermind investors, make sure to click the link below and have a quick chat with Elliot to see if you're right for the mastermind level, and then we can level up and you can have Joe and I on the call with you